Hello, this is Oliver, and in this video we're going to talk about the application tutorial of the weekly standard of procedures step 1. Okay, so this is weekly candle structure, and to follow this step easily, we just need the monthly candle narrative from the monthly routine. Okay, so that should give us directional bias, monthly candle structure, and intra-month bias. Okay, so yeah, once we have these three components, we have narrative, and then with that narrative we now know, okay, what candle structure are we gonna anticipate for this upcoming week. So here's just gonna be a quick rundown on how to get the monthly candle narrative. So step 1 is the directional bias, and all we need is pretty much a draw on liquidity, or short-term draw on liquidity, intermediate-term draw on liquidity, and a long-term draw on liquidity, and just identifying institutional order flow and sticking with that. So are we in a buy program? Are we in a sell program? So let's go into the chart. So we're going to start here on the monthly for the pound, and we could see that it's pretty much in a tight consolidation now compared to 2022 or 2021. And if we look back the most recent monthly candles, we've been stuck in that inside bar range here. So we could say that that this chart there's not much detail for us to dissect on the monthly, because we are operating a sort of small range months at the moment. So what I'm going to do is I'm going to mark out the long-term draws on liquidity on the monthly chart here, which would be look back from 2024. So just get a vertical line here. Whereas the long-term draws on liquidity, basically this swing high here, 2023 high, and then you also have 2023 lows, that's the draw on liquidity, and you also have the rejection blocks that it's operating within, so that's why it's trading real lethargic at the moment. So these are pretty much the long-term draws on liquidity. We've got the RB, 2023 high, 2023 RB here, 2023 low here. Okay, and we're not going to expect anything too large range to happen unless we can break these 2 points. Since everything's small range, let's look on the weekly chart for more definition. Okay, so here we are on the weekly chart. We can see that RB is aligned with this order block here. And why is this order block key? Well, let's look back some quarters now. This is just finding directional bias for that monthly candle, by the way. Let's look back. So this is the yearly open. Let's look back at Q4. And let's look back at July. So that's Q3. So we could see within the last year, if we start dissecting the years into its quarters now, we can start to see price ranges, market structure to operate within. So we can see here, this is 2023 Q3's range. Here we are in an extreme premium condition, so it hit the order block, extreme premium, rejected back down to a discount condition here. What is it reacting off currently? This propulsion block here. So we'll mark up the propulsion block, but also this Medusa PD array. Okay, so the most extreme fair value gap within the price range. That's the Medusa. you can see that is what price is currently at. So if price wants to remain in a sell program from these levels, it will continue to break this kind of raise, and it should see signs of breaking the reduce. But we can just say that this is now this would be like the intermediate term draw on liquidity. Okay, so we have long-term draws on liquidity. Okay, which would be Q3 lows here. So we have here Q3 lows. Sorry, Q4 2023 lows. See how price lows there is in Q4 2023, and you also have Q4 2023 highs getting rated. So it's already met some sort of intermediate term target by coming back down at discounts. The next one would be these lows here, and these are more of a long-term draw. Okay, this would be 2023 lows. Okay, so we can say that, okay, we're pretty much in a premium, reacted from the extreme portion here, took out Q4 2023 highs, and then you see this order block being printed after the total soup, and then you see a balanced price range within that order block. Okay, now it displays lower, so I'm just going to mark out this as weekly, the value gap, and all of this is, it's just building that monthly candle directional bias. Okay, so let's go ahead and okay, so that's how Q1 was pretty much delivered. So early consolidation in Q1. So it used early consolidation in Q1. Later in Q1, finally formed the Judas swing, breaking all of this open float, and then displaced lower on the opening of April. Okay, so that was now that we have like directional bias. Okay, so what levels can be used? We have a intermediate term draw here, and we can find more short term draws here as well. So actually, this one would be the long term draw. This would be intermediate term draw, because we want to see prices attempt to break previous quarters highs and lows every 3 to 4 months. So let's say this is the IT draw on liquidity. This is LT draw on liquidity, and this is ST draw on liquidity. Okay, so already we're having directional bias for that monthly candle, and then we could see, okay, what is the current institutional order flow? Well, weekly reacted off this, we took out the high, we're breaking down candles, and we could also study more institutional order flow on the daily chart. So if we look here, after we took out Q4 highs, hit that order block, okay, we broke these down candles, we broke that weekly fair value gap, trading below it, acts as resistance, then we can see how institutional order flow kicks back in. Okay, so once we've got the directional bias portion done, now it's just time to study monthly candle structure. Okay, so what we want to do here is it large range month or small range month? And for this, keep it very simple. Everything I just outlined here, that should be on the quarterly chart. Okay, so there's a quarterly environment chart there. So this should all be quarterly stuff. Alright, that's what you need to help build a monthly narrative. But now, once we understand that, and we only have to do it like pretty much 2 times every quarter anyways. Okay, we can get rid of that, and we can just keep the charts plain and simple. Okay, so we have draws of liquidity, where the market's most likely to go to, based on these draws of liquidity. Now we just want to know, okay, what is the monthly candle structure? So we can anticipate how price is going to trade towards these points. So to do this, just mark out every month. And study the structure of the monthly candles. Okay? If the monthly candles wants to trend, it should continuously break previous month's lows. Okay? If it wants to hold, then it will pretty much not break previous month's highs and lows. It would stay stuck. So we had that inside bar range from the monthly. You can see how price didn't want to break this low, so it held the RB. Didn't want to break this RB, so that causes consolidations. Okay, but if monthly candle structure wants to be large range, it will break previous month's lows and highs. And then we can also study the overarching market structure holistically here, where we have consolidation here. So we could see large ranges, and you can see how price does a little stop hunt of the consolidation first below these lows, inducing liquidity, then traps the liquidity. Now we can expect large ranges. Okay. So what is the candle structure for the month? Where it's most likely going to be large ranges if we've had consolidation, inducement, manipulation, and then change in the state delivery as well. So we can start expecting that as well. And yeah, just trusting institutional order flow to take it towards these points and continuing to have large ranges. Okay, continuing to have large ranges. And to continue to have large ranges, then we just need to continue to break previous month highs and previous month's lows. And it's that simple. So we can see that this month right here, since it didn't align with higher time frame level yet, or wasn't ready to move, it was a small range month. But once we hit a key level here, which was 2023 Q4 highs, we changed the state delivery. You can see how price starts making large ranges, and therefore creating large range months. Okay, so now we know monthly directional bias, what side of the market to trust. Now we can also know, okay, are we expecting large range month where price continues to break previous month's ranges, or small range month where price just stays stuck within a small range? And you can anticipate this after large ranges. So after large ranges, that's when you want to consider small ranges as well. So they interchange. But then, once we have directional bias and candle structure for the monthly candle now we can start going into inside of that candle. And then this inside of the candle here, this is exactly how we start framing the weekly candle structure here. So this is pretty much the last step. Okay, so let's go ahead and go inside. Okay, and don't know why the monthly candles didn't delineate, but let's go ahead and show you a little trick I like to use. So visible currently on all intervals and below. What this does is it blocks it not showing on a high time frame, but once you go into the daily or once you go into 4 hour, it's fine. Okay. So once I'm inside the candle now, okay. First of all, I just want to anticipate what levels can form the high of the month and what levels can form the low of the month. So this is a weekly level, but you can also see it if we see in this order block here. The order block tells you what it look, and then you can refine it to the actual imbalance within that order block, and that formed the actual low. So once I'm inside of the candle here, that's how I'm gonna frame the candlestick size for the week. Okay, because to deliver this monthly candle, it does it with weekly candles. So what I like to do is from the monthly open at 17, so Sunday opening for the month, to the monthly close. Okay, that's what I'm using to anticipate large range weeks and small range weeks now. Okay, so I have the narrative of this candlestick here. Now all I have to do is see, okay, inside of the candlestick, okay, what is the Power 3 narrative? Okay, so we can see week 1 here, Power 3 narrative was still consolidation. Okay, you can see our price is consolidating, and consolidations build all frameworks first. So you want to see this as a precursor so that we could start seeing large ranges. If we don't have consolidation like this, then it's pretty much that there can't be large ranges, since large ranges comes after small ranges. So that's why we can see a little consolidation here, and it used the first week, but also if we look back into the previous intra-month here, you can also see it was a continuation of week 4 within March's range. So you can see this just a big consolidation period here. Okay, so in those, if the intra-month says, okay, we're consolidating because it's you don't want to be calling for range expansions at the closing of a candle or at the start of a candle, unless holistically it's ready to do so, and we'll get into that with many case studies. But generally at the end of a candle and at the start of the candle, it starts to accumulate for the Power 3 narrative here, right? From the open, high, low, close. So if it's at that Power 3 stage of accumulation, we anticipate a small range week. Okay, so what does that look like? So let's say, okay, we've anticipated a small range week now. Once we go into the weekly candle here, and let's bring up that exact week. So that would be Sunday 31st. If we could see that candle as it deliver. So I like to start at midnight for the weekly candle. So where this gives context behind the weekly candle now. So I like to start at midnight and then end at Friday 15, 3 p.m. We can see how this week was not really much of a large range week. Okay, what did it do? Pretty much took out previous week's low. Did it go to and through it? No. Okay, so it didn't go to and through it. All it did was collect trap traders here. So on the opening, trap traders to be forcing downside, and then after everyone's trapped on the downside, trapping everyone on the upside again, and then look at how the week closed. Okay, it closed as like a small range week. So there was not, sure you could catch it up and down, but there wasn't a big, large range week candle printed. Okay, the bias just went indecisive. It went up, down, just tricking everyone and trapping everyone. Okay, and that's because the Power 3 narrative was at accumulation here. Okay, what about when the Power 3 narrative, okay, and that, by the way, at accumulation, that's when you want to study warning signs. Okay, so warning sign, I'll just go over that real quick. Here is something like this, right? So you got market here, right? Taking out a key low. If we want to see week's trend, right? If you want to see this weekly candles trend and be large range, it should break previous week's low, such as this, and then trade to and through it, right? You see to and through it. But here, since the Power 3 narrative for the monthly candle was accumulation, you can see how it breaks it and doesn't do anything. So it's like it does like a pretty much outside bar consolidation, right? Okay, so I lost my train of thought. Where was I going with that? Okay, got it. Okay, so that's a warning sign. That's the warning sign, alright? How do we know if it's going to be accumulation? Well, it will show lots of these warning signs where it doesn't go to and through previous week's low. Okay, so it went here, trapped everyone, heavily discounted with the opening price for the week, right? So if we just look at this week here, week is heavily discounted. Forget about all the ranges. Above the opening price is premium, below the opening price is discount, and opening price is fair value for the week, right? So you can see for the week it's extremely discounted with price as well because it's 100 previous weeks low. Then it showed a warning sign of a reversal gap here. Okay, so that's a big sign that we're not gonna have a large range week. Okay, we're not gonna go to and through. And the next objective for price that it likes to do is it likes to just gravitate next to fair value. Okay, then from fair value it seeks another. If we cross above the opening price, the narrative then goes, okay, we're seeking a premium now. So where can a premium be met? Previous week's high. Notice how another warning sign happens here. Okay, so we have an intra week reversal here. Why? Because if it's going to be small range week like this, it's not going to break previous week's highs and lows and then go to and through it. Alright, so that's why we see a reversal here. And then what's the first objective for price? Back to fair value. And then the second objective for price is also just fair value on closing. So we can see where's fair value. Here is also fair value, okay, because we have buying, now fair value at selling. This area is balanced and just retrace back to fair value. So this is what small range weeks like to do. It likes to trap traders, and then seek fair value and then close the week small range. Alright, and all of that was possible. This entire structure of candle was possible due to identifying that the Power 3 narrative was consolidation. What if the Power 3 narrative is manipulation or range expansion? Okay, so we can see here, the week starts here at this 25% the marker. We have manipulation, hits that higher time frame level, forms the high of the month, and then we see a change in the state delivery by breaking this down candle and this fair value gap, and also this Medusa here. So notice how it just broke multiple discount arrays from the high, after due to swing, and what this market structure suggests as well, consolidation here and here can lead to large ranges. Okay, so that can help anticipate, okay, we have a large range week up and coming. So how are you going to trade the week going forward? Let's push this to the next week. This should be midnight. This should be 3 p.m. Let's look at this. Okay, so this is the manipulation PO3 part here. And then the transition from manipulation to range expansion, that could be pretty instantaneous. It could happen within the same week. So we can see here, early week, since the PO3 narrative says, okay, we are above that monthly opening price here. We are at the potential premium price here. That could cause intra-week reversal because the month is transitioning from that open high, and now it's transitioning to that range expansion part, from the manipulation to the range expansion part. Okay, so we can see, let's go ahead and watch this. There you have a intra-week reversal, and then the candles start creating a large range week. So why does the large range week happen? Large range week happens because this formed the high of the month. Imagine the amount of order flow that's generated to form that high month. So it's going to use the weeks to deliver it. We had an intra-week reversal, however, because this part, before we even got into that transition stage, the week was still considered manipulation phase here. Okay, then you get the change in the state delivery. So once the PO3 narrative for the month is switching from manipulation range, this is when you want to consider large range weeks. Let's go back to monthly candle here. Now, once you're transitioning from that a manipulation to range expansion part, okay, you always want to consider the potential that we could form the low of the month here. All right, so if we formed the low of the month here because we hit a key level, if you kept shorting into that, then you would, on the lower time frames, even though you got the directional bias correct, the intra range suggests that we could retrace into fair value, then maybe on the next month seek it again. So that's why we need intra-month bias, not only directional bias and candle structure. We need monthly bias to navigate inside all of this chaos. Okay, so let's go into some warning signs. Okay, sometimes this is for large range weeks, right? But sometimes you get a warning sign at these stages that say, okay, it's gonna go back into a small range week. So because of the narrative is about to change. So these are low volume narratives. These are high volume narratives. So warning signs are just signs to say, okay, are we gonna go from high volume because it's range expansion to now, offset distribution? Okay, where it's focused more on taking profits as the narrative. And we have one here, intra-month reversals. That is for small range weeks, so we already covered that. The other one is consolidation into close. And for this, use a fulcrum swing of the intra-month currently. So we can see here, that's where the fatal swing happened. Get a fulcrum swing. And reverse it. And we can see with that 1-to-1 standard deviation. So this is once you're at 1, that's when you want to consider that we could consolidate into close and be lethargic because it's already completed a classical swing. But also 1.5 to 2, alright, that's a big move already unfolded. So once you have like a big move like that, that's already unfolded, that could be the potential low formed in, and then we could consolidate going into the close, or even retrace for value and then going to close, and that would be the closing of the monthly candle. So you want to use that as a warning sign as well. If we break this, however, it's going to be an even larger range month towards the 3 to 4 standard deviations. Okay, so that's when you'll have signs of that once these levels easily break. But if we're struggling to break these standard deviations and it's met like a key drawn liquidity, a key level here, and intra range timing says this could be the offset distribution part, okay, we want to trade our weeks accordingly. So that's why this week, so far, I decided to take the long trade up here for the pound, because I was anticipating that the week could have a slight pullback here, into the range. So that was what constituted for my long, and yeah, directional bias though is still bearish, since I want to see price break the candlestick structure of the previous month's low here again. But inside of the candle, it if it doesn't match, if it doesn't align, then that could affect how the week's going to deliver as well. We could go small range week into the close, or even a counter trend into the close, and then on the next open resume the same thing over and over again. Okay, so that's just warning signs. So I covered the consolidation warning sign, but also the offset distribution warning sign, based on the intra-month bias. Now, basically, with all of this, you should be able to anticipate what the next week is going to do. Okay? So based on the information we've outlined today, what you should be able to do is anticipate, like for instance, this is the last week of April. We've had a potential low here. If we look at the economic calendar, next month on the 1st here, there is NFP and there is FOMC. So do I really expect this week here to be a large range one when the volatility from the news is not really there? But next week, could that be more of a type of move that could break previous month structure as well? So I'm long-term thinking with the economic calendar as well. I'm saying, okay, what news events do we have this week? What news events do we have next week? And all of this could help determine, okay, so for this upcoming week right here, am I really going to anticipate a large range week where it breaks this out again? Or a small range week where it's lethargic because it's just taking profit on closing, or running stops on closing? So here, which is another phenomenon that likes to happen as well on closing. Okay, so just getting the late shorts and squeezing them. Squeeze. That's a nice price action characteristic on this closing part. Okay, so on this PO3 narrative of offset distribution. Okay. Okay, so that should be it. Hopefully you found this video insightful. Just to sum things up, monthly candle narrative, that's all you need. And then it's a lot of process, but you have to do this once a month only. Okay, so you only do this once a month or twice a month. And then you refer to it every weekly open. Okay, so everything I did here, you just do it once a month, then refer to it every weekly open, and then you should get your answer pretty much instantly, based on what the intra-month is doing, based on what the directional bias and candle structure is doing. This upcoming week, am I gonna anticipate a large range week or a small range week? It's that simple. So once you go into the week, you have more context behind your week. So for when price does break previous week's highs to previous week's lows, you can study how it reacts there. Or if we're anticipating range expansion, you can trust these moves. And these are the times of the month where you want to be looking for one shot, 1 kill setups. Okay, so these are the times of the months where you want to look for OV process 1 trades. Okay, so where there's a lot of volume, and then at the start of the month or the end of the month, that's when you want to look for OV process 2 trades. So that's more day trading. So before I ramble way more, I'll just end the video here. Hopefully you enjoyed.